So I wonder if you see Nvidia falling much further. Is this an attractive price to be buying it, do you think?
Well, we own it in some of our portfolios. We are not buying the dip yet. We do want to learn more about DeepSeek and more about how the market or the demand for inference chips might outpace those for training chips. We think the whole area is going to be vibrant. We just think there might be a little bit more of an adjustment to this new reality.
Where you say that what DeepSeek shows is kind of that you can do more with less capex. Yes. Who do you think that's going to motivate in the US most, as Donald Trump is kind of saying? Who's going to be best at doing more with less?
Well, anyone using AI. We are focused on the productivity gains for knowledge workers, which are going to be massive. That's the biggest impact of AI. But if we're looking at sectors and spaces generally, where this acceleration in innovation is going to be meaningful, we think autonomous mobility, so robo-taxis, we think that's going to scale from essentially nothing now to an $8 to $10 trillion global opportunity, including China. But the sleeper here is healthcare. And we're seeing the convergence of sequencing technologies, all kinds of sequencing technologies, artificial intelligence, and then gene editing technologies like CRISPR-Cas9. That combination, we believe, is going to cure disease. It's already curing disease, sickle cell disease and beta thalassemia. That's CRISPR Therapeutics. But we think they're aiming now for type 1 and type 2 diabetes. That would be a category killer. So think about that. Curing disease, AI helping us decode the secrets of life, death, health.
Nvidia has found itself in a bit of a quandary, as certain indicators suggest it might be gearing up for a bumpy ride, warns Nvidia Insider. Yet, with key earnings reports emerging and whispers of supplier delays, the excitement surrounding Nvidia isn't just about what has happened, but about what could unfold next. Nvidia's AI dominance and its partnership with companies like Supermicrocomputer Inc. and Vertiv Holdings Inc. stand center stage in this unfolding drama. Welcome back, everyone, to Investocracy.
Well, all eyes will be on Nvidia tomorrow, that's for sure, Frank. Even in days when Nvidia doesn't report, the headlines seem to affect semiconductor chips and Nvidia in particular. I think it's interesting to gauge where the market is on this one, because Nvidia, frankly, the stock is where it was last June, right? So you haven't had this big run up into earnings that we sometimes see. Of course, there's been a long trend there of Nvidia kind of blowing out earnings despite the high expectation and the move higher in the stock price. Right here, you're seeing a stock that's down year to date, down today, flat for more than 6-7 months. And yet the expectations are there for kind of north of 50% revenue growth. So there's certainly room to disappoint. There's a lot of expectations built into Nvidia stock, but also that broader chip complex and the AI build out. So we'll be watching closely in terms of portfolio positioning. I think we're a little bit more defensive right here. I mean, we want to be in stocks. We're in capital appreciation mode, but we're our heads on a swivel.
All right, you're kind of defensive. We're just hitting on some of the Mag 7 weakness. That used to be a defensive play. I also just want to talk to you about momentum in the market. We've seen a big shift in momentum. We're going to show the one-week moves of some momentum stocks, including Palantir. I'm looking at the chart. I'm shocked by this one. Palantir actually down 25% over the last week. Walmart down almost 10%. Goldman Sachs, another momentum name, down almost 7%. What do you make of this big shift? And we're talking about momentum.
Well, the market is clearly paying attention to some of these headlines. I mean, in many ways, the tariffs may act as a tax. They tend to slow down potentially inflation, but everyone's trying to assess what this means for profitability. And the consumer is really, not all in right here. I mean, we're seeing some strength still in the labor market. We know that GDP, we're not really flirting with recession levels, but you start to take a little bit of air out of the economy and a little bit of a slowdown in the consumer. The Fed, kind of pausing their more accommodative stance, inflation being sticky. And those momentum stocks, they do pay a price. I mean, they benefit the most on the way up. And right here, the market is kind of recalibrating and saying, look, maybe defensives, maybe some kind of small cap value, some international names. A Palantir sell-off like that is interesting, but you step back. For many of these stocks, you can look at, some period of time where they're up 50%, 100%, 200%. So you kind of have to take some of that volatility in both directions when you play these momentum names. And right now, the market is saying we want more stable, more cash flow, more value type names.
Coming up later today, we also have an economic report, the second reading of GDP. These economic reports, they seem to become, sometimes they're important, sometimes they're not. Obviously, the consumer sentiment report on Friday had a big impact on the market. What are you expecting out of that? The estimates for 2.3%. Are you expecting us to hit that? Are you concerned at all about the impact that this could have on the market ahead of, again, what could be another inflection point tomorrow with Nvidia?
So what's really interesting, Frank, is that the underpinnings of the economy still look strong to us. I mean, I think we'll still see low but positive GDP growth, a labor market that's still strong, inflation, being sticky, but not exactly spiking back to anywhere near the levels we were at, a year or 2 years ago. So we would expect a kind of sound GDP report that does keep us, as I mentioned earlier, in this capital appreciation mode. I mean, we still want to own equities. We just need to be really careful about what we own. I think that plays well for active managers. I mean, it's amazing that Nvidia's earnings report is probably more interesting right now than the GDP report, but that's kind of the market we're in.
Nvidia's recent performance shows that the stock has cooled off by 2.83% year-to-date, despite a remarkable 69.93% gain over the past year. Amid this roller coaster, Nvidia's stock moves dangerously close to its 50-day moving average, which will signal whether the stock will soar or stumble. Trading volumes have thinned, and the Relative Strength Index, RSI, hovers around 50. This scenario has left investors to question, will Nvidia maintain its momentum, or are we on the verge of a deeper pullback, possibly toward that daunting $100 psychological support level?
This is down this morning, $132 per share. Jeff Seeker with me now. Now, obviously, I read your stuff, Jeff, and you're saying Nvidia, they report on Wednesday, Nvidia will burst the AI bubble. What do you mean by that?
Well, Stuart, and I don't know if you know, but I've been recommending NVIDIA since 2018 on your show. I actually say that repeatedly.
You made a lot of money for it. That's true.
But people paid off their mortgages, bought Bentleys, bought Nantucket beach houses. I mean, people made a lot of money on NVIDIA, but what it's become is it's the curse of high expectations. And the reason why I believe NVIDIA is going to burst the AI bubble is the expectation out of there is that NVIDIA has a triple beat, meaning they beat earnings, they beat revenue, and Jensen Huang increases the expectations for next quarter. A triple beat is the earnings are going to be good, but they're not going to be that good. And of course, we have the issue of DeepSeek. We have the Chinese DeepSeek, which is lingering out there. It's a big mystery, like the Loch Ness Monster. People don't really know what it does or what it could accomplish. But one thing people know is that it is cheaper and may make it less likely that companies will spend the capital expenditures they've spent in the past.
So Nvidia's numbers on Wednesday, and when they get on the call, Jensen Huang, you think it's a bust?
I think it's a bust.
The stock comes down and takes AI stocks with it.
I think it's a bust, and it's been showing, it's been level, it's been flatlining, and it's been showing this vulnerability. And when you have company, you reported it this morning, like Microsoft, that are reducing their spending on data centers, you have to take that very seriously because there was so much hype over this stock. This was the belle of the ball, and right now there is going to be some trouble ahead.
You selling your Nvidia?
I've sold a little of it. I'm going to hold on to some of it. I'm not, as you know, Stuart, I'm not a big seller. I like to hold things long term.
You don't want to pay the capital gains tax.
No,
I know you.
I'm waiting for Trump's tax cuts. No, I'm waiting for him to get rid of the IRS. That would be even better.
Don't hold your breath, son. Yes. Jeff Seeker. Thanks very much, Jeff.
Market analyst Beth Kindig poses such questions, suggesting a possible buying opportunity if the stock continues to go down. If Nvidia's management acknowledges existing supplier delays, it could nudge the stock into further retreat. Yet, with the strength from Hopper and B200 systems, they might help counterbalance these challenges. Super Microcomputer Inc., a key Nvidia ally, has thrown a curveball by trimming its fiscal 2025 revenue guide. They cite delays in Blackwell GPU deliveries, prompting their CEO Charles Liang to adjust expectations on their much-anticipated direct liquid cooling systems deployment. Similarly, Vertiv Holdings, another cornerstone in the Nvidia ecosystem, reports robust fourth-quarter results, but with softer forecasts for its first quarter due to timing differences in AI shipments. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
It's going to be extremely positive. So those using AI, whether for productivity or other applications, are going to benefit. We think the two most profound use cases right now, besides increasing productivity for everyone, autonomous mobility, so think cars, drones, and so forth, and interestingly, the healthcare space. We think the convergence of various sequencing technologies, AI, and CRISPR gene editing, that convergence is going to cure more and more diseases over time.
So these sound like huge positives for the businesses that are involved in that stream. What does it tell us about US tech overall? We had a conversation yesterday about whether this is some kind of end of US exceptionalism, and that might be in terms of stocks broadly, but in terms of the US tech sector, are we talking about that? Or is this just, the Sputnik moment that's been mentioned many times, a chance for the US now to catch up again?
Yes, I think competition is great for the U.S., and DeepSeek is competition, no doubt about it. I'm hearing all of the titans, tech titans, speak of it glowingly. I don't think we know everything about it yet. So, no, I think it's competition is good for the United States. Lowering costs is great for the world. The collapse in the cost of innovation should help all regions of the world. I will say that new productive forces, which was Xi Jinping's new phrase, I think 18 months ago, seems to be showing through right now. Common prosperity was the previous one, and I still think that's in effect. That was more about margins. This is about innovation. So we're looking more closely at China now.
I want to pick up on China in just a moment, but I want to go back to that point you make about cost of innovation collapsing specifically. That would almost lead to the fact that perhaps it brings down the barriers of entry for mid-cap tech firms or maybe people away from the hyperscalers. But you haven't seen that second level outside of the AI adopters really catch the same bid in the way you see Amazon or Microsoft or even Oracle catch up a little bit. What's the hiccup there if, as you say, the cost of innovation is collapsing? Why aren't some of these stocks reflecting that?
Well, I think there's a big debate going on. And if you look at the second, third, and fourth quarter of last year, you look at the mega caps and the rest of the stocks in the S&P 500, you'll see mega caps in the second and the fourth did very well. And the smaller cap stocks did very well, much better than the mega caps in the third quarter. I think there's a little bit of a tug of war evolving here. And if we're right, the most massive concentration in the market in history, worse than the Depression, is probably going to give way to a broader-based bull market. We're seeing that in our portfolios, and it really did start right around, actually, the day after the election. And I think one of the most important things is going to happen is regulations coming down. Even in AI, in the United States, their regulations started to intrude in a technology that is today where the internet was in the early 90s. We don't even know what we have yet. Yeah. We're as excited as back then, but now is not the time to regulate it heavily.
Well, I think you've got the president on your side when it comes to that in the States. I want to come back to kind of this idea of the hyperscalers here. You're famous for your beta strategy, especially when it comes to the tech space. I think it's fair to say that the highest beta right now is in some of these tech names, in Nvidia, in Microsoft, in Google. Just looking at some of the moves we've seen in the last 24 hours, not to mention the last 12 months or so. Why not increase your holdings for more exposure to the hyperscalers? Yeah, we do think, we do own Meta and Amazon in our flagship, and we own more of them in our other more specialized portfolios. And in Europe here, we have an AI and robotics fund, and we hold probably most of them because they are going to benefit from the declining cost in AI. And even Meta, who was really the open source leader. The DeepSeek is open source. I think Meta is saying, wait a minute, what's going on here? And they're going to use some of the techniques, the algorithms that DeepSeek has used to improve their own platform. So we're not negative on them.
While contemplating investments in Nvidia, one must reconcile the current challenges with the promise of a brighter tomorrow, suggested by Nvidia's AI endeavors. As this saga unfolds, what's your take on Nvidia's journey? Analyzing its technical capabilities or betting on its long-term AI aspirations? Whatever the standpoint, one thing remains clear. Nvidia's story continues to captivate, inviting your opinions, perspectives, and perhaps even your market maneuvers. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.